Hey, good morning. Just waiting. For some reason, I can't mute this before it starts. There you go. What is that, a 10-second lag? All right, good morning, everybody. How you doing? Give me 30 seconds. I'll be right back. Well, yeah, 30 seconds. BRB. All right. Yeah, boy. Peace. How low can you go? Death row. What? Yeah. You ready? You ready? Yeah. All right. All right. Good to see you. Come and vote. Let me move all my... I got all these pages open all over the place. Master of disaster. I'll close that. I'll close that. I'll close that. I'll even close that. Cool. Less is more, as they say, right? Close it all down. Shut them down. I shut them down. Yeah, I'm closing all these different pages. All right, cool. I know you couldn't see anything I was doing. All right, you guys ready to go? Yeah. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Whew. Hey, happy Thanksgiving. I'd like to tell you that I'm grateful and thankful for the community that you and I exist in. I believe that Forex.Today makes the world a better place. So thank you for being in it and sharing your life with me. This journey we call Forex is a tough gig. I've been doing this for 20 years and it ain't easy yet. But I can tell you the greatest threat that ever happened to me was trading alone. For months and months and months and months in the middle of the night, trading on my own. Slowly I started, depression kicks in, I think. And the other thing is just like you get sloppy in your trading and maybe a little lazy, maybe lethargic, if you will. And you start making mistakes you otherwise wouldn't. And oh man, it's difficult to stay sharp. So we get together every day and we keep each other sharp, razor sharp. So I thank you for all the hard work that you do every single day. And I believe this community makes the world a better place. I'd like to point you to some resources In the description below the video, there's a link to a trustworthy and ethical foreign exchange broker. They call themselves tradersway.com. They're an ECN. Yeah, they don't trade against you. If you like that, give them a shot. Try a demo account. Maybe they earn your loyalty and respect. How about 88 hours of training videos for 88 bucks? Oh, I forgot. I have to respond to an email. Somebody emailed me. They're quite pissed off because they paid $1,382 for this $88 course. And they're pissed at me. And they want to know what I'm going to do about it. I'm like, so anyways, there you go. It was $1,382, but I lowered the price because of COVID. There's a 90-minute lecture on trading stocks. You can get free feedback on your technical analysis, free. There's a free 90-minute lecture on fundamental analysis. And I also wrote a book. There's a free training course on trading Forex. It's focused on technical analysis. It's all there, man. All in the description below. So check them out. And while you're there, we'll click the thumbs up button, huh? Here's Trader's Way. It's pretty. Again, ECN, what does it mean? They don't trade against you. Straight through processing. You click buy or sell, and it goes right into the interbanking system. So they match you up with maybe a billionaire on the other side of the world. Okay? Yeah. Cool. And why would they care about your education? Because they want you to succeed. Now, if a broker was trading against you, they don't give a damn about you. They want you to fail. So they don't want you to be educated. Anyways, here we are now. Gee whiz, now I've lost my chat. Where'd the chat go? Now I lost our chat. Hang on. I got too much going on. What is going on? All right, hang on. I got to go bring the chat back. Hang on. I can't see what you're seeing. Go live. There you are. All right, there you are. Okay, I got to move that around. Bring that there. Good. Anyways. Lucas says someone needs to grow up. Well, but anyways, no, so I got to put that on my list of 19 things to do today, which is totally fine. Here's my house, by the way. No. Hey, we're doing a party. You want to come to the party? We're doing a party. We're going to get together in Nashville, Tennessee. The capital of country music, American country music. Okay? So 21 days we're going to get together. I'm going to shake your hand. We'll take a selfie together. People are going to say, who's that, Tom Cruise? Is that Brad Pitt? Is that Bradley Cooper? No, that's Wayne McDonald. Oh, I've heard of him. Yeah. So anyways, we're going to have a cocktail and a 4-course gourmet meal. Cool. Hey, wow, this is an old page. Let me refresh this. Guess this has been open for days. There we go. I've added some pictures. This is the entrance to our restaurant. It's a old Southern antebellum style building. And you go into the lobby. That's what it looks like. Pretty nice, huh? Yes, they have food. That's a bone-on filet mignon. That's probably what, gnocchi over there? Some bread. Nice glass of wine. They have salad. Yeah. And then this is the library is a bar on the side of the antebellum home. And you actually get there by walking. So here's the main hall, and this is a little lounge. And then next to this, through the lounge, that open area is actually the library bar, which has its own entrance as well. You can enter through here and grab yourself a glass of wine or a cocktail. And there's this little area out here. And then actually next to that, there's a garden and a gazebo. So when we're done and we're dinner and we're ready for our digestif, we can grab a glass of wine or a cocktail and come out here and finish the evening. And after that, if you want to do some line dancing or ride a mechanical bull or just be a straight up cowboy or cowgirl for the night, oh, your dreams can come true. Okay. Yes, Guy Killer, I did that for an hour this morning already. So yeah, it's on QuantBox already. So anyways, swing on by, come to the party, come to the party, come to the party, come to the party, come to the party. Okay. It's awesome. You're going to have a great time with fellow traders. All right. Yen weak, which is good. We want that. Dollar not weak yet. In about 12 minutes, we have an unusual boat of news. Very unusual news situation today. So tomorrow is a holiday in the United States. That means there's no live stream tomorrow. No Investor Bootcamp live stream, no QuantBox live stream, no TradePlans.ai live stream, no Forex.Today live stream, no live stream. None on Friday. That's why they call it a holiday. Yep. So today we have continuing jobless claims and initial jobless claims. But you're like, Wayne, doesn't that come out on Thursday? Yeah, but tomorrow's a holiday, so they're releasing it today. Very unusual. We have durable goods. We have Michigan consumer sentiment. We have later on today, we have the EIA inventories. Okay. Yeah. And I think we even have like rig counts and stuff today. Is that true? We have Baker Hughes rig count today. Shakalaka, boom, boom, boom. Brother, I need a simple method. I'm trying every strategy on YouTube. Therein lies your problem. You should watch the lecture I gave, what was it, 2 days ago? Hang on. I have a solution for you. I have a solution for you. Let me get a link. I'll answer it in great detail. How to become a master trader with just 1 penny. All right, there you go. This was recorded yesterday. Yesterday. Okay. How simple? I actually show you discuss why you don't need any indicators at all. Now, if you're going to use an indicator, you need to know what it does, which, of course, most people don't. Otherwise, if you don't know what it does, why do you use it? Oh, well, some idiot on YouTube says, oh, if you use MACD this way, or if you use Fibonacci that way, or if you use, what's a good one? Oh, parabolic stop and reverse. Here's what an idiot YouTube guru does. They do something like this. I'll pick Euro Aussie, which is, okay. And then you do insert trend, parabolic stop and reverse. And they say, buy when it's low, sell when it's high. Good. Dumbest thing ever. Dumb. Couldn't be dumber. There's all kinds of dumb things. How about insert indicators, oscillators? Let's throw down stochastic oscillator. Okay, it's got my custom settings, so it's better than what the average guru uses. I know, because I've been trading for 20 years. Here's what they do. Sell when it's overbought, buy when it's oversold. Dumbest thing ever. Dumb, dumb, dumb. Okay? And those gurus, they don't even understand the math. I don't think they can do the math. They don't have any education. Were they licensed and registered? No. Have they traded $1 billion in a month? No. Then what qualifications did YouTube ask when they applied for their YouTube investing and trading channel? None. You don't need any credentials. Any idiot can become a YouTube guru. So this would be a horrible place. Or Elliott Wave. Oh, Shakala, right? Oh, you just have to recount your waves. It's not a 5 wave. It's a C correction. No. So watch that video, and I'm like, look, here's what you need. You need to know how price moves. You need to understand price action. You need to understand the way the market behaves. That's just like, it's the fundamental truth of basically support and resistance. You need to understand support and resistance. Price action. Cool. Great. Then, to improve your price action trading, you could add indicators. But if you don't understand price action, then understanding an indicator is pointless. It's stupid. So what I was talking about yesterday is part of the art of samurai swordsmanship. Okay? To understand, you're trying to understand 10,000 things. What I'm trying to share with you, and you asked for simple, I'm trying to share with you one thing. And if you know the one thing, you understand the 10,000 things. And that's what the art of mastery is here. So I discussed it yesterday, so I don't have to do the speech again. Okay? Don't worry about all the different indicators and all the different styles and strategies and tactics and all that. Forget about all of it. And stop listening to idiot YouTube gurus like me. Now I can flex and say, oh, have they ever been licensed and registered? No. Do they have a master's degree from an Ivy League school? No. Have they been trading for 20 years? No. Then what have they done? YouTube. Whatever, dude. Yeah, of course. Now, if it makes you feel better, I have a big house, I have a fancy watch, and I have a fast car. So what? Who cares? Okay? But apparently to them, it's the goal in life. Really? I'm most proud of raising amazing children and having a very strong relationship with my wife. And I'm building a lineage that has changed the course of my bloodline. And long after I'm dead, the money I make is going to contribute to society. Yeah, big difference. Jumbo! All right, so let's move on. I think you should know what you're trading and why you're trading it, and then understand from that how to trade price action. And then if you can add a few layers, a few onion layers, Let's, let me just do this, Euro Swissy, whatever. Let's do like, I had it this way yesterday. Let's say you start with simple, okay? Basic. Here's a basic chart. What's the trend? Mostly sideways, ever so slightly up. How do I know that? Well, look. Okay, cool. Now, could we add to this to make it a little more helpful, a little more detail? Yeah, so it's not just price action I have. I also have pivot points. So check this out. In January, you could look to sell. And by the end of the year, your target is down here. Done. I just planned all of 2023 for you. What about 2022? Okay. January, sell. Okay. Target is here. You're like, we went through the target. Yeah, but it also ended at the target. Cool. Look. In less than 1 minute, I can show you how to plan out your entire year. Cool, right? Richard says pivots can also tell sentiment. Yeah, not quite, Richard, but I think what you're talking about, and I wouldn't call sentiment. I'm just sensitive to that word, but here's 2022 central pivot. Here's 2023 central pivot. So you're saying the sentiment is down here, right? Yes. So, yeah, I guess you're right because I know what I say now. I realize what you're referencing to. So I say, look, if we were looking at average, you would look at the high and the low, right? Let's do it this way. You'd do the math this way. High plus low divided by 2. Okay? That gives you average. So what you're talking about, and you're right, is when you do high plus low plus close divided by 3, you get a sentiment rating. Yes, a weighted average. And the weight is the market closed lower than it opened, so therefore it's more bearish. Correct. I agree with you. You're right then. And therefore, maybe, just maybe, this is the plan for 2023. Mm-hmm. Oh, 209. That ain't bad, Lucas. Thank you. Let me go through the rest of the news. Okay, so much to go through. 209, better than expected, which might actually be bad news. Let me go back to the the stocks, because that gives you a sense of direction. And I mean, the market wants to go up no matter what happens, but we'll see. Let me go back to this trade plan from yesterday. Okay. Cool. What else we got going on? Durable goods, X defense down, Durable goods headline down. Really big misses here. Durable goods ex transportation, 0. 4-week average on the initial jobless claims is 220. So below average. So that's a good, which might be considered bad. Anything else? 1.84 million Americans are getting an unemployment check. Just grabbing some reading here. I thought we had a report coming out today. What day is it? It's the 22nd, right? Well, how come this is the Treasury page? Well, let's go to the home. Maybe I got it. Why wouldn't they just have the most stupid government? What do we call it? What is this? Autumn forecast, right? Autumn forecast. No, I thought I had the right. I must be mistaken. I thought we had an update here. So 20 spring. I thought we were going to have an autumn statement. Autumn statement date confirmed. Oh, they've moved it to tomorrow. All right. So anyways, tomorrow we'll have a report. All right. Coolio. So what I think is a good report on jobless claims is bad. And what I was talking about is, I was talking about this earlier this morning at QuantBox Live, where the bad news would be good. And I expected things would be, more on the bad side. Well, it was more on the good side. But nonetheless, the bad news, meaning more people losing jobs, means the Fed doesn't hike anymore. And if the Fed doesn't hike anymore, then that's good. And so bad news is good, and the market goes up. Now, today we've had good news. Less people lost jobs. Below average loss of jobs, which is good for the people that didn't lose their job. But then it doesn't help this, and so good news is bad. It's weird, right? I know, right? Shakalaka, there's a training course. There's 2 training courses inside QuantBox. Probably a total of 17 hours. And I'm adding to it, maybe even this week. During the holidays, I might record recordings. So anyways. Be careful today, guys. Be careful today. The good news is probably not good news. So there you go. But it is good news, which is probably bad. But nonetheless, we are still riding our moving averages, riding the 21 to the upside. Obviously, the threat today is that, like when we look at SP 500, the threat is we can't make a higher high. So, are we going to have a hot open then go cold, or are we going to go with a cold open and go hot in the afternoon? We'll see. Lots of temptation for profit taking today. Yeah, it's right, Lucas. If people ask questions, I address them. Yeah. Yeah. Yeah, we do pretty good work on the fundamental side, for sure. Yesterday, we covered something called the week on the street. So I provided an email to everybody. This is what I covered yesterday. And I include all the links to all the different reports. So we covered, all this stuff. Swissy monetary policy assessment. So for example, I click on that. Cool, right? Here it is. Yesterday. Okay. And then, we read this together and we talk about it. I usually do a quick and dirty, and I leave it to you whether you want to do further research. Okay. Why do you need a signal? Tell you what, give me $5 million. I'll trade it for you, and I'll keep 20% of the profits. You don't need a signal. What's a signal going to do? If you can't make a decision, I'll make the decision. No signal necessary. All right. All right, let's take a look around the world. Really, you got to be watching this line in the sand. Let's take a look at the indices and see how the currencies are responding. I'd like to see US dollar weakness today, but of course I'm concerned that it becomes strength. So one of the things you could do is trade the Dixie, because this is mimicking Dixie. It's doing its own calculations. It's not actually the dollar index. It's just calculating it. Okay, so anyways, I'd like to keep dollar below that. And if so, that's risk on. If that's the case, the stock market goes up. Okay. Look where we are here. Oh, it's an interesting moment of truth. Is Aussie going to go strong? Wow, that's interesting. Let's take a bigger point of view. Actually, it's on the wrong time frame. That's what's going on. Got to have time congruency. There we go. Let's change the point of view longer term. Okay. Dollar rolling over. Now we had to wait a long time. So remember, I drew this. Like you see this. You see this. I drew this back in July, and it went up, and it took a lot longer. So I thought it would happen. Let's say as soon as the third week of August. But certainly by the third week of September. Well, hell's bells. It didn't happen until October. But it rolled over nonetheless. Santiago says, how are you able to implement that indicator on the currency indices? I'm just drawing on them. So I'm not sure which indicator you're talking about, but like the sloped lines and stuff. Well, that's Fibonacci, but let me get rid of that. Oops. Okay. That's all. Oddly, it did the same thing twice, which it shouldn't be doing. Interesting. It shouldn't be doing that. Anyways, they're two different studies. They should be giving us different results, but for some reason, must have been an update. All right, do you guys want to do some tradeplans.ai? Do you want to do some technical analysis? Let's do that. I've been looking at my charts way too long. Visit tradeplans.ai, post a trade plan. Actually post a real trade plan, like actually put in a target and a stop. Okay? Let me be bitchy a little bit. If you're too lazy to put in a proper trade plan, I'm too lazy to review it. Oh, snap. I know, I'm sorry. But anyways, let's do it. Okay, you can do, you all right? You can do gold and silver. You can do some crypto. You can do some Forex trades. You can do the stock indices. Cool. And when you post a trade plan, it's completely anonymous. Okay, and try to give me a good chart. The other day, someone cut off the price and the time, and they're like, what do you think of this? I'm like, well, how would I know? I can't read your chart. So anyways, let's get on with it. This trader, again, all anonymous. There's no identification whatsoever. So you don't have to be shy. You don't have to be shy about it, no. All right. Selling Aussie Kiwi. Really? Let me just go back here. This is how you use your indices, guys. Strong versus weak. Aussie versus Kiwi. They don't look much different. Let's go out daily. Okay, Aussie sideways, Kiwi sideways. I don't understand this trade right off the bat. Why would you want two neutral assets? So right off the bat, it doesn't smell like a good trade. Okay, and then what? We have a range, and this trader wants to sell in the middle of a range. I think what they're thinking is down, 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 up, up, and then sell, which is a trend strategy. But this is a sideways market, not a trending market. The trend is sideways. And it doesn't make any fundamental sense. This is like neutral versus neutral. So you're not going to get a trend out of it. So no, pass. All right. This trader wants to buy gold at 2,000. Problem is the target was 2,000. And now they want to do it again. Okay, well, let's explore it. Let's explore it. Let's take a look. What you got? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, down, out, 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 out. Okay, now into a new support. So what does this say? This is a swing trade. It's actually a position trade. This target suggests that. Let me do it in a different color so it can go over. So this bottom, using a position trade strategy. Yeah, okay. All right. And then you got to worry about risk. So now I go here. This is risk. They recognize it. Now I immediately feel like this is quite aggressive, but they've set it up technically. I mean, they've set it up properly. I think there's a buy, there's a profit, and then there's tomorrow's buy. Yeah, we don't know what's going to happen, but if you're going to follow some basic rules of engagement, up to that area, it's not going to happen in one day, but that's what this suggests. So they're bullish. They're riding the moving averages on a 4-hour. They're using daily pivots. They're doing a continuation day trading strategy inside of a swing position strategy. Yeah. I don't think it's free and clear. There's a lot of resistance up here. But everything else, I mean, like, yeah, well, if you're a bull, you're like, what resistance? We're going to clear through them. So, yeah, nothing wrong with it at all. Okay. It might be not that easy, but it's reasonable technical analysis. Take a look here. This trader, Kiwi Swiss franc, and 15-minute chart. Okay. All right. And that looks like a bullish day trade. R1 to R2. Whose pivots are these? Very inaccurate. Who the heck created these stupid pivots? Anyways, I don't use pivots like that, so I'll tell you why. I use R2 to M4, which is much more accurate. Okay. And you can see yesterday, you could have left pips on the table because your pivots suck. All right. So what's going on here? So central pivot point. So this must be an S1. Yeah, these are lousy pivots. Whatever. So let's do this. So for this to work out, let me try to mimic the colors here. Okay. We need this to turn north. And you need this to turn north. So for that to happen, I don't think it's going to work out quite this way. I'm just looking at like, you're going to get something more like this. So it's similar but different. I don't think this is going to work out. I don't give two hoots about that price. So yeah, I don't know where these pivots came from. You're using TradingView. You need to look for something called Wayne's pivots on TradingView. Okay. And you get my pivots. These are very sloppy pivot points. So anyways, like it's too early to confirm this. So it's hard for me to say yes because this is bearish, bro. I mean, like that's what it looks like. And when people draw things like this, they're like, oh, it's going to go up and then it'll be bullish. I'm going to buy it. And I fear that they buy. No, that's wrong. No, it's wrong. It's making lower lows. We're in a neutral zone. It's just as likely to do that. And so it'll probably work out. But but not there. Luis says, do I have Wayne's pivot points in TradingView? No, I don't use TradingView. Okay. So look, I agree with that it's too early. So I'm going to say no. Because it's too early. It's too early. It's too early. I'm afraid someone's just going to buy it because of that, and it's too early. It's not there yet. It's not developed. Now, it might become, right, like the way I drew it, you might get a higher high, then you buy a higher low. And I know that's what they're saying, but I'm going to say no because I'm worried they're not going to trade it properly. It's too much of a stretch on the if-then. Euro Swissy long. Lower low, lower high, lower low, lower high, low, triple bottom, higher high, higher low, higher high, higher low, higher high, higher low. Big pullback though. That big pullback is a warning. And then up. Yeah, these are, we're hitting targets early in the day. All of these seem to be hitting, right? We hit target and then down. We hit target. So that's Asia and down. London and down. Here we are in Asia down. These are all Asia fades. Okay, cool. So to rinse and repeat, I can't quite see what's over here. I sense there is something over there. Whoever created this chart is showing me there's something there. I'm not sure what it is or if it's important. What else do we know? This predicts that, so that's good. And these areas here, right? This is a buy zone. 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 Is this a buy zone? No. How the heck could you have a buy zone in a downtrend? Gee whiz. Can you have a buy zone on a double bottom? Yeah. Can you have a buy zone on a higher high? Yeah. Could you have a buy zone on a higher high? Yeah. Could you have a buy zone on a higher high? Yeah. In particular, to make it even super simple, right? Boom shakalaka. After the 5.8 or after the 21.55 cross, buy the dip, 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 take profit. Yeah, okay, yep, I'll go with it. That's fine. Oh, and I did that already. Anybody new? Oop. Whoa, my mouse went crazy. I think my batteries are... I just put batteries in this thing. It's amazing. You buy a $300 mouse, and it just burns through batteries. All right, so we have some new posts here. Thank you for posting. Thank you for that. Aussie, for some reason you posted it 3 times. I'll tell you what. I'll only do 1.5. 980. Why would you post it 3 times? Well, maybe there was an error or something. I don't know. We'll find out. All right. This trader wants to buy Aussie yen. All right. All right. So good. They showed me roll reversal. And that it's heading up from here. And that they're already in, which is good. And that they anticipate a breakout, a pullback, and a long. Okay, technically that's great. It's a good entry because I would measure from this bottom to this high. It seems to be about a 618. All of that's reasonable. It's now in here made a higher high, so a higher low, higher high, higher low. Will it make a higher high? Okay, technically all of this makes sense. I'm down with it, brother. Okay, here's the problem that I need you to look at, and it's fundamental. Yield curve controlled by the Bank of Japan might be over. We don't know. Do your research. And more today than a year ago, a month ago. More than today, more than a month ago, more than 3 months ago, more than 6 months ago, more than a year ago, more than 2 years ago. More than ever, there's a potential of this. Just be aware of it. Fundamentally, things might be changing. And as beautiful as this technical trade is, it might all be over and it'll just seem random. Soon as you, and here's classic too. This has been going up for 3 years. So now what? Every amateur trader wants to buy it, right? So the classic would be as soon as you start to buy it, it drops 5,000 pips and you keep buying dips on the way down. Well, no one ever taught you to buy dips on the way down. So anyways, this could be over. Technically, it's not. So keep doing you, keep doing what you're doing. This technically makes sense. I like it. It's fine. It's fair. It's well done. It's pure technical. It's great. And it'll probably work. But you might find on Monday, it did not. So I would say technically, well-planned trade. Fundamentally, get ready to be wrong in a hurry because of fundamentals. And remember, tomorrow and the next day, we're going to have thin markets. Ooh la la, we're going to have thin markets. And if we have a cascading effect like an avalanche, some people, right? So let's say it becomes apparent that yield curve control is probably going to come to an end. Then some smart traders are going to take profit. And then that'll move the market down. And then stops will be hit. And then more stops will be hit. And more stops will be hit. And the market's thin. And there's no hedge funds and no institutional investors and no bankers banking, no hedge funds funding, hedging, nobody is even noticing the avalanche. No one is seeing these stops being triggered until they've been triggered. And so what you don't want to do is make a mistake here and like be long and be strong and forget to use a stop and just all of a sudden profit taking, stop hitting, more stops, and the avalanche gets bigger and bigger and bigger. And you come back on Monday and the yens have dropped 1,000 pips each. And you're like, dude, that's totally impossible. Shut the back door, it is. I've seen yen pairs move 300 pips in 1 minute. You haven't seen it. Doesn't mean it hasn't happened. Let me tell you, when somebody says it can't get worse, doesn't have the experience to know it can get a lot worse. Now, Frank says the next BOJ is not till like the end of December, so maybe it won't drop till then. No. Now, that's logical, Frank, but take the next step. It's in game theory. If you believe, Frank, in the idea that the Bank of Japan announces an end to yield curve control, or is even perceived that yield curve control is coming to an end at their December 19th meeting, then how do you make money? Well, somebody the day before bets that it's in an end. Well, now, if it's just two traders representing the whole market, and the the first trader says, well, the end of yield curve control is going to be December 19th. So to make money, they sell December 18th. Now it's you. You come in, you're like, well, I believe people are going to sell December 19th. So I will sell, or you believe they're going to sell December 18th. So you sell on the 17th. They believe you're going to sell on the 17th because they think you know they're going to sell on the 19th, so they sell on the 17th. So you sell on the 16th, 15th, 14th, 13th, 12th, 11th, 10, 9, 8, but. So if you think it's going to happen, you do it now. But even then, what I'm more worried about, Frank, is not people selling. It's traders seeing that we're at very, very high prices. And that maybe in the near future, yield curve control comes to an end. Or maybe it's year-end profit taking early. I've seen that happen around Thanksgiving. So they take some profit, which leads to a red candle, which hits somebody's stop loss, which is also when you take profit, your broker puts in a short position to offset your long. So it creates a red candle. Then you hit someone else's stop. Now it's not a manual take profit. It's an automated take profit. Now that stop might be a profitable stop because you might have raised it above your entry, or it might be a losing trade for a recent trade. But nonetheless, your broker enters a short position to offset your long. That's why it's a stop, to protect a long. So that puts another red candle, which hits this stop loss, which puts another red candle, which hits someone else's stop loss. No one is sold. There's no bears, is how I should say. Bulls are selling like crazy, hard and fast. Okay. All right. And I'll tell you why. Let me go to my chart. I'll pick, let me just pick a euro yen or something. It doesn't matter. Okay, we can do this. All right. Okay. People have been long since May 2020. I'm not even joking. Another group went long around the same period, 2021. And then 2022. Now we're at the end of 2023. The thing is, this market is long, baby. Long. Nobody's short this market. Nobody. Okay? Nobody is short this. The analogy is it's a ballerina standing on her tippy toes, holding a bowling ball above her head. Oh my God. Her arms are shaking. Her legs are shaking. And when it falls, it's going to fall hard. Maybe. Now, this is a weekly chart. It's not going to go that far this week. But just realize you're vulnerable. Do you even see it? Do you even see that this was a key price? Oh, my phone going ape shit right now. Hang on. I got kids hanging around. I got to make sure it's not the end of the world. Oh, I see what's going on. Yeah, that makes sense. All right. So anyways, do you even see the threat of that? Now look at this. 1, 2, 3, 4 days ago. Okay. We hit a profit target zone. Do you think that's random? Or did some institutional investors take profit? Now, then we drop to the daily 21. Is this random? Or did some institutional investors buy? And what is everyone else doing? Getting run over like a freight train because they don't know how to trade. Okay? The buyers buy low, sellers sell high. Right now, I see only bulls in this trade, by the way. Oh, Shakalaka, please don't be so formal. You can call me Wayne. Okay? I think this is all bulls. I think bulls sold here, aka take profit. I think they bought back here. Bulls buy. Okay? So, if this happened to roll over, and it hasn't yet, but if it did, at some point, a bear might actually sell. There's no bears in this market. None. Not even one. Okay? Now you're like, that's not true. I sold. Uh-huh. Okay. Okay, great. So there you go. There you go. Okay? Okay? I mean, this is why we use our tools. There's a reason why I use this moving average. There's a reason why I have that pivot there. So I hope it goes up, and I hope it goes up forever. But hope's not a strategy. Yeah. Hope is not a strategy. Okay, my WTI, rolling to the next level. Rolling, 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 rolling. We're now at the mean. That could be important. 74 could be important. Oh, yeah, that's the mean price. I might be mean, but I'm definitely not average. Okay. I'm hoping that actually leads to a stock market rally today, but we're definitely into the next zone now. Somewhere between 72.5 and 74 is the support. Go back to the stock market. It's not quite open yet. Oh, S&P's trying. S&P's gunning for it. We're on the line, though. I'm on the run. The cop got my gun. Yeah, there we go. Oh, and it's right on a pivot, too. Shut the back door. That's amazing. Okay, be very careful. Cool. Did you see the kickoff for the peso? Okay, there's the peso plan. We're dropping at 3,000 pips. Zoom in. And check it out. It stopped right here. Why? Well, that's the plan. Literally, look at the plan. M3 to M1. Cool. Profit taking, profit taking, profit taking. What do you think? And then what? Like that, maybe? For Dees? Could be a rabbit, could be. Right, Richard? Well, Richard sees the risk. There's definitely a risk of a top. I mean, that's what resistance is. Now, if you're a bull, there is no resistance. If you think there's resistance, then why are you a bull? Okay. Still waiting on ETH. Okay, still waiting. Wait and wait and wait and drop into a daily chart. I know, right? So we have it all marked out, as you can see. It's not a tough decision, as you can see. I could blow you away, or you can trade with me. I said to trade with you if you can get me to the border. Okay, kicking off the moving average, doing some basic price action. We'll see if she can climb. Keep above the 2K. And there's a long ways to the upside, eh, Brew? What do you think? 2,000 to 3,000? Yeah, at least. 3,500, really. So, something fundamentally would have to change. Let me explain. Okay. Sideways, 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 sideways. Okay. Now a little more bullish, but sideways. And then Bitcoin clearance for cash ETF. And then everyone betting that Ethereum is next to get a cash Ethereum ETF. And we're on our way to 3,500 to 4,000. Yeah. It's not happening yet, but can you reasonably predict the future? Yeah. Could be interesting, don't you stink? Smell like a plan? Okay, Ripple. Back below 60. We made a 618 Fibonacci retracement yesterday. Look, a random walk, everybody. Look, it's random. There's the 618. Below that are pivot points and stuff, right? Cool. So are you a buyer or are you not a buyer? Okay. Look at the price. Okay. Is or is you ain't my baby? Are you or are you not a buyer? If you're not sure, you're not a buyer. Okay? And now, if you are a buyer, it's time to start doing some planning. It's definitely bearish. Your job is to identify when it's become bullish. Okay? And so on the long run, you want to see the moving averages roll over. Flattens out, flattens out, flattens out, turns bullish. Okay? Okay, flattens out, flattens out. Okay. So maybe this time next month, next week, next month, next year, you're game on and you're buying Ethereum, or sorry, Ripple, and you're going probably for $1 to $2 or beyond. Maybe it will also benefit from legal changes in the United States. Maybe they'll benefit from Binance people going to jail. I don't know. You do you. Yeah, the Binance guy has to go to jail for 18 months and pay $50 million fine. What does that tell me? The guy's got $5 billion stored somewhere. And they're like, look, you did bad things. You worked with bad people. You did things that are illegal. You broke the law. So we have to punish you. So we'll tell you what. You pay us $50 million. We're going to tax you on the money you made, but you get to keep the other $5 billion. And, well, we got to make a show of it, so we'll sentence you for 10 years in prison, but you'll do 18 months. And you'll get out of jail in 18 months, and you'll have $5 billion, and you can, there you go. That's the price you pay. But after that, you're on the free and clear plan forever. Sounds like a good deal. Right? Sounds like a good deal. I mean, what's the other deal they could do? Well, we're going to take $5 billion back and we're going to put you in jail forever. How do you like that deal? How do you like them apples? You're like, dude, you stole it. You stole the money by breaking the law and laundering money for terrorists, drug dealers, and pedophiles. You should get to keep nothing, in my humble opinion. But whatever. That's me. Right, Frank, right? Like, yeah, the United States did very similar things. We find you guilty of making $1 billion by breaking the law and defrauding your customers. So you have to pay a $100 million fine. I'm like, dude, what? That's a taxation. Like, and what happened to the other 900 million? Anyways. So, yeah. So anyways, keep your eyes on these things, y'all. Okay. And by the way, if you do ever stretch out and pay the $88 to take the training course at investorbootcamp.com, you will know that this entry, okay, and that top predicts that we would be back to this price. It's in the course. Notice that we hit it once, okay, and then tried again, and then drop, and then drop, and then drop. It's kind of interesting. So are you prepared for a change of higher high, higher low, higher high, higher low, higher high, higher low, higher? At some point, it might be game on. See, none of this may be bears, although this volatility suggests there are bears. It's a mixed market. There are clearly buyers down here, and there are clearly sellers up here. Okay, and amateurs in the middle, right, get run over by a freight train, loaded like it never came, reeling like his brain one more time tonight. Yeah. So anyways, there are buyers and sellers and then and innocent bystanders. Ready to crash and burn. So the stock market's going to open up in 9 minutes. That means I got some work to do. Hey, have a nice weekend. Happy Thanksgiving. I'm grateful for you being in my life. I love the work that we do every single day for 20 years, whether it's FX Bootcamp, Investor Bootcamp, Forex.Today, QuantBox, TradePlans.ai. I like working with you. I appreciate the effort you put into this every day. I've traded. When I quit my dream job to become a Forex trader, I thought everything was going to be great until I started trading alone. And that became the biggest risk and threat to my Forex trading business that I've ever had. Absolutely terrible risk. So we keep each other focused. We keep each other strong. We keep each other razor sharp. We give each other energy. We give each other the courage and strength to get out of bed and do what needs to get done, despite it being 4 o'clock in the morning. You got to get up because I'm waiting for you. So there's no opportunity for you to be lazy. There's no opportunity to be weak because we wake up in the morning early to cull the herd. Okay? We prey on the sick, the weak, and the lazy. So it can't be you. In the samurai book that I'm reading, written in 1625, they talk about the, how do they say it? The time of the tiger. I'll have to research this more, but in 1625, the author of this book was talking about the time between 3 o'clock in the morning and 5 o'clock in the morning. The time of the tiger. And I'm like, damn, boy, that's me. There are bulls, there are bears, there are pigs, but I'm a tiger. Yeah. Right? I don't know. Very cool stuff. But nonetheless, look, you're here every single day without fail. And I know you got lives and you got stresses and many of you have jobs and like, dude, life is complicated. You got to deal with family, good, bad, and the ugly. Very, very difficult just to be a human, but then to be a human trying to become a foreign exchange trader in a market where 95% of people lose. Oh my God, that's hard. And I've been doing this a long time, decades, and it's not easy yet. But I know with our relationship, our community, we don't just survive, but that's the first step. But we thrive. And I thank you for that. So happy Thanksgiving. Peace on earth. May the pips be with you. May our profits be above average.